So welcome to this course, FP&A Professional, Financial Statement, Aggregation, and Analysis. So this course is actually the 6th course in a series of 7 FP&A courses in total that all use the same financial model that we're looking at right now. And if you haven't had the opportunity to check out the courses that precede this one in the series, well, then you should definitely check them out in order, since they show you how to build the financial model up until the point where we have it right now. So let's dive into the course material now and get started on this 6th course in the series. We'll see you soon. So let's jump in here and do a quick tour of the part of the model that we're going to be building in this FP&A course. As you're going to see through this model tour, we're really going to be pulling things together by completing the financial statements and doing some aggregation as well. So first up, you may wonder why we're showing the tax schedule here when we're supposed to be aggregating the financial statements. You're going to find there's a lot of interplay between the tax schedule and the income statement, which is immediately below. So we thought it would be prudent to put a discussion in here about the tax schedule and some work to do on it so that we understand it. So the key takeaway here, and really the motivation for putting together this tax schedule, is down here. A lot of models would only include one line for taxes or total taxes. But the problem then is that you really don't know the breakout between the current taxes here and the deferred taxes, which is critically important. So we absolutely need the total taxes to flow to the company's income statement, but the reason we need the breakout is really to get the current taxes, which are cash taxes. So these are going to impact the company's cash flow. The deferred taxes, on the other hand, are non-cash, so they will have no impact on the company's cash flow. So to understand the schedule, we really want to think about the health checks that we want to perform on this company. Number one, we want to understand whether or not it's profitable, and we're going to do that by looking at the income statement. This is where the total taxes are going to go. But we also want to do a health check and evaluate the company's ability to manage cash flow. This is where the current taxes come in because they are cash taxes. So let's go down and take a look at the company's income statement here. And we're going to use the scroll lock key just to roll things down so we can see what we're doing. So when we get to the financial statements, we'll definitely give you a little guidance, but we're going to largely leave you on your own to complete these. Why? Well, they're not too difficult. What you're going to find with the financial statements via the income statement and the cash flow statement is they are largely just links to other schedules and simple little functions to summarize. In fact, one of the things that we talk about in our financial modeling guidelines document is that you should never do detailed calculations on the financial statements. For example, if we were to look down here at the revenue line, we're not actually calculating revenue here. We're just linking to it. We've done all of the hard work in the calculations on the revenue schedule, which we've already prepared in a previous FP&A modeling course. And in fact, the same would apply here for the cost of goods sold. This has already been calculated on a different schedule. Same as SG&A, depreciation, interest expense is calculated on the debt schedule. Here we have a tax schedule for the taxes. So it can already be tricky to link together financial statements properly. And you don't want to complicate things even further by trying to do complex calculations on these schedules. You want them to just be links over to other areas in the model where you've already done the hard work. The other thing that we talk about in the financial modeling guidelines document is our preference for including positive items or favorable items as positive numbers, and all of the unfavorable items like cost of goods sold or SG&A we put in as negative numbers. That way we can quickly glance down through the company's income statement and easily tell what is favorable and what is unfavorable. So that was a quick tour of the first 2 schedules that we'll be building in this course. Let's jump ahead now to the next video, and we'll show you the remainder of the schedules that we're going to tackle in this course. We'll see you there. So in this section of the model tour, we'll look at the cash flow statement, and then we'll head over to the totals tab and discuss what we're going to be doing in terms of aggregation into quarters and full fiscal years. Now, the cash flow statement is one place in the model where we actually don't have any flexibility on how we present numbers in terms of negative and positive. All cash inflows to the company must be presented as positive numbers, and cash outflows are always presented as negative numbers. So if we think above to the income statement, which gives us a meaningful measure of profitability and one of the health checks that we want to perform for the company, this cash flow statement allows us to perform a different health check. It allows us to look at the company's cash balance and see how the company is managing cash through three sections. Obviously, cash from financing, cash from investing, and cash from operations all help us to monitor the company's health from a cash flow management perspective. So from the cash flow statement, we're going to pop over to the totals tab for the first time in these FP&A courses. And here you're going to see that we're going to be aggregating the figures across by quarter for each of the years, and then also further aggregating into complete fiscal financial years. As you can see, we're making use again of the checkboxes here, so we can see that the company has recorded 4 quarters of actuals, and then the remainder is forecast. So that's coming across over to here, where we can see that all of 2024 at this point is actuals, and 2025 remains a forecast. One of the things you'll be able to see in this section of the course is that we have a really slick and reliable way to aggregate all of these figures, reaching across to the model tab, grabbing the figures that we need and summarizing them here. It's going to be a fun course. One of the things that I think you'll be able to really enjoy as well is that we're really going to pull things together in this course. We're really excited to get started. We'll see you in the next video. So as you can see, we have the model set so that we're looking at the tax schedule. And as we mentioned, there's a lot of interplay between the tax schedule and the income statement. So we definitely wanted to start with the tax schedule before we do the income statement. Now, first of all, just a quick reminder of our motivation and our purpose for creating this tax schedule is right down here. As you would recall from our earlier discussion, these total taxes are going to flow to the income statement, help us get a meaningful measure of profit. The current taxes here, we're really going to use those for the cash flow statement. These are cash taxes, and these are actually cash outflows for the company. So we definitely care about that as a health check from a cash perspective. Now, what we're going to ask you to do after this video is effectively pause and try to build this tax schedule on your own. And just a few hints to get you started. The first thing is that these earnings before tax here, or EBT, are not going to show up just yet because they link down to the income statement, which has not yet been completed. So you really have two choices when you're building this tax schedule. The first choice would be you can link down to the income statement, which has not been completed, in which case you will get zeros all the way across here for earnings before tax. And a lot of your tax schedule will actually be zeroed out and will look a little funny. And then the second option that you would have is you could look onto the completed version that's in PDF format and temporarily just hard code these numbers all the way across for EBT. And that way you'd be able to get your tax schedule to match, and we could come back and replace these hard codes with formulas later. If you choose to do that, we would recommend changing the fill color for these cells that we're highlighting now to a different fill color as a reminder to go back and overwrite those hard codes with formulas. So this is definitely one of the first places to start here, is to get the EBT filled in. Once you get that filled in, you'll want to come up here and find a way to dynamically connect these 3 years or dates into the model somehow. And notice that 2023 is a year before the time period for the model. So you want to figure out how to get that in place as well. Once you have those fiscal years in place, then you'd be in a position to pop down here. And for these payment years, we want them to be 1 year later than the fiscal year. The idea is that the government would likely base the company's installment payments on the taxes that were levied from, or the earnings before tax that were levied from the previous fiscal year. And once all those years were sorted, you'd be in a position here to calculate the monthly installment. And from the monthly installment, we'd want to base that on the earnings before tax and the effective rate from the fiscal year, which was 1 year prior. After the monthly installment, you can continue in the bottom section of this tax schedule. You would already have the EBT here. Now, for the effective tax rate, we would advise you to use a lookup function. You're going to know which year you're in by looking across this row. And then you'd want to look up the correct fiscal year and get the formula to return the effective tax rate that you're really looking for. That'll allow you then to calculate these total taxes. For the summary at the bottom, next up, you're going to see that the total taxes here are just linked to the total taxes that we just calculated above. After that, we're going to recommend that you calculate the current taxes. Notice that they're coming from the monthly installments. So what you'd want to do in this section here, again, use a lookup function. Again, you know which year you're in here, and you'd want to be looking up the payment year and then pulling down the correct monthly installment, and that's how you get the current taxes. From there, you're going to be able to calculate the deferred taxes, because the deferred taxes are simply the total taxes minus the current taxes. So hopefully this tour of the tax schedule has helped, and hopefully you've taken some notes so you know the order in which we're recommending that you complete this schedule. Now, and just a heads up and a reminder, it may make your life simpler if you were to just take a moment and hard code these numbers across here for earnings before tax. And don't forget to change that fill color so we can remember to replace them with formulas later. Also, remember, a little pro tip, if you're going to hard code numbers horizontally like this, select the area first like we're doing here, and then you can punch in the numbers and hit enter, and Excel will index everything from left to right automatically for you. Hopefully that's helped. We'll see you in the next video. Good luck. As you can see here, we're back on the tax schedule. And what we've done down here, as we mentioned, is we've hard-coded these values in from the completed version of the PDF, and you can see that we've changed the fill color to this light orange so we can remember to come back and replace them with formulas later. So first up, let's go up here and check out these fiscal years. Now, the easiest one to probably start with is right here, where we want 2025. So let's just put in an equal sign, and then we can slide all the way across here to the end where we can see 2025 and hit enter. So then to get the previous years, what we can do is just pop into here and say it's equal to this one minus 1, hit enter, and then we can copy that formula and paste it over here in order to get 2023. Now it's also going to be straightforward to get the payment year here. We know that the payment year is going to happen 1 year after the fiscal year. So we're going to pop in here and we're going to say equals. And we grab this year and we say plus 1 like that. Then we can do a copy, highlight across, and to paste special, Alt-S, down to formulas, hit enter. Now we have the payment years coming up 1 year later than the fiscal years. So now let's calculate the monthly installment here. We're going to put in an equal sign, take the earnings before tax and multiply that through by the effective rate. Now that'll give us the annual amount of the taxes, but we want a monthly installment. So now we're going to divide by 12 like this. Hit enter. We can do a copy here, highlight across, Alt-S, down to formulas, and hit enter again. So now we can go down and look at the effective tax rate here. This is where we recommended using a lookup function. The one that we would definitely recommend here is the XLOOKUP, if you're on a more recent version of Excel. If you're not, we can also show you how to do this using an HLOOKUP. So let's start off with the XLOOKUP. We're going to put in an equals XL, and it already comes up, so we can hit the tab key to complete that function name and open the first bracket. It's asking us about the lookup value. Well, we're going to look up right here where we know our year, then put in a comma. The lookup array is going to be across here where we grab the fiscal years and then put in a comma, and the return array, well, we want it to return this effective tax rate here. Now we can close the bracket and hit enter. Now before we copy things, let's pop back into the cell with an F2. We want to lock some things down. We're going to use the shift key here. In fact, we could use Control Shift to jump across in increments like this. We're going to take the lookup array and the return array. We're going to tap F4 to completely lock those down and hit enter. So now we can calculate these total taxes equal to effective tax rate multiplied through by the earnings before tax here, and hit enter. And the next step is really easy. The total taxes are just repeated down here. So we'll say equals, and we link to these and hit enter. Now the current taxes up here is another place where we recommended a lookup function. And again, we're going to recommend the XLOOKUP. If you don't have access to that on your computer, you may be finding this a little frustrating, but don't worry. In the next video, we're going to show you how to do this with an HLOOKUP. So let's use an XLOOKUP in here. So we're just going to say equals XL, comes up. hit the tab key. For the lookup value, once again, we're going to grab the year right here. The lookup array this time is going to be the payment year right across there. Then put in a comma. The return array will be the monthly installment here. Close the bracket, hit enter. Now we're going to pop back into that cell. Remember, we want to lock down these two arrays here, the lookup array and the return array. We're going to tap F4 to get $signs in there and hit enter. So we know the total tax, we know the current tax. So the deferred taxes must be the difference. So for the deferred taxes here, let's just say equals the total taxes minus the current taxes and hit enter. Now we're in a position to copy everything across. Let's highlight all the way down here like this. Do a copy. Select across using the Shift key, Alt-ES, down to formulas, and hit enter. We're all done. Now, if you don't have access to XLOOKUP on your computer, no problem. Jump ahead to the next video. We'll show you how to do this with an HLOOKUP. If you do have access to the XLOOKUP, feel free to skip the next video and go ahead to the one after. We'll see you soon. So as we mentioned in the previous video, we would definitely recommend using an XLOOKUP if you have access to it. But if you're here, it may be because you either don't have access to the XLOOKUP, or maybe you're just curious about how an HLOOKUP or a VLOOKUP works. So first of all, before we get started, understanding the function names is important. So HLOOKUP, the H stands for horizontal. So it looks horizontally across an array for you. And a VLOOKUP, well, the V stands for vertical. So it works in the same way, but it will look up and down in a vertical fashion. So let's start off down here. We already have an XLOOKUP in place, but we're going to overwrite it now, and we're going to hit HL. HLOOKUP comes up. Let's hit that tab key. It's starting off with lookup value, just like the XLOOKUP. So the lookup value in this case is going to be right up here where we have the year. Put in a comma. Now it wants what they call the table array. So here's what you need to do for the table array. You're going to start off by selecting across for the fiscal years, but then we're going to go down like this to also include the effective rate that we're going to want to grab. Then you put in a comma. Now it wants the row index number. So what it's really asking is it's saying, well, inside this table array here, which row do we want it to return? We want it to return the second row, which has the effective rate. So for now, we're going to put a 2 in there, which is a hard code. We'll replace that with something a little bit more dynamic in a moment. And then what we want to do is we want to put in a comma. Now this last argument here in these square brackets is optional, but we're always going to recommend not skipping that optional argument. So what we want in this case, between an approximate match, we want the exact match, which is a false. So we can go down to here, hit tab, and it'll put the word false in there. We close the bracket and hit enter. Now, one modification that we need to make to this HLOOKUP function here, let's tap F2. We definitely want to lock down this table array here. So we're going to highlight the table array, tap F4, and hit enter. Now, there's one more modification that we're going to recommend if you're using an HLOOKUP, and a lot of people don't know about this as a best practice, but let's take a look at the formula for 1 second. What we have in here is a hard-coded 2, which can be very dangerous and lead to a lot of errors in financial models. The issue here is we've got a hard-coded 2 in there, but what would happen if somebody inserted a row inside of this table array? Well, that would mean it would stretch down so it was actually 3 rows high, and then we would need a 3 in there. So what we need in place of that 2 is a way to dynamically measure the height of this table array. We're going to show you how to do that in a moment. So the way that we're going to dynamically measure the height of that table array is with a rows function, ROWS. It's going to tell us how many rows are in a certain selection. So let's pop in here. We're going to go over to the 2. And we're going to delete it. And then we're going to type in ROWS, open a bracket. Now we're going to need to tap the F2 key again to be able to move. What we're going to do is select, we could select the same selection as the table array, but it can be a little confusing to see when they're overlapping. So maybe what we could do instead is select these areas like this and then close the bracket. And let's see what this is doing. It's going up here, measuring how many rows are in that selection, and it's going to be returning a 2 into our HLOOKUP. So the only last step here would be to pop back into that formula, and we're going to lock down the reference for that rows function by selecting it here and tapping F4, and then we can hit enter. Now on your model, you'd obviously want to go here to the finished formula, do a copy, highlight across, Alt-ES, down to formulas, and hit enter like that to get the HLOOKUPs all the way across. So let's practice once more. This time we can go down to current taxes equals HL, hit the tab key. The lookup value is going to be the year like it was before. Put in a comma. The table array this time will be the payment year here, stretch down to include the monthly installments like that. We're going to put in a comma now. The row index number, let's go straight to that rows function, open the bracket, and we're going to select over here the number of rows in this selection like that. We can close the rows function now, put in a comma, remembering not to skip this last optional argument, go down to false, hit tab, and then we can close the bracket and hit enter. So let's get some things locked down before we copy them. We're going to tap F2. Obviously, we want to lock down the reference here for the rows function. Tap F4, get all those dollar signs in place. We're going to also lock down this table array here with an F4, hit enter. Now we can copy, highlight all the way across, Alt-S, down to formulas, and we're all done. Now, if you've watched this video, you definitely would probably agree that the XLOOKUP is much more simple than using an HLOOKUP. VLOOKUP, we won't go over, but it's very similar. It just looks vertically instead of horizontally. Definitely, if you have access to the XLOOKUP, you should be using it. The only hesitation would be making sure that other people on your team or in your organization also have access to it. So when you create models that have an XLOOKUP, they're going to be able to use those models as well. I hope this has helped. We'll see you in the next video.
Continue learning. Join CFI today.